Welcome to Chart of the Day Cafe for Thursday, November 24th, 2016. Just going to read our disclaimer quickly. Trading stocks is a high level of risk and viewers should complete their own due diligence on any stock or underlying that they intend to own. 100% of the content of this video and communique is intended for journalistic and educational purposes only. This video and all indicators, strategies, and articles herein should not be construed as investment advice. So we always start our videos off with a look at the Russell Index, and for that we use the IWM, which is the ETF that represents the Russell 2000, and we step back to take a look at it on a 5-year monthly time frame. We were paying particular attention to this blue channel that the Russell traded within through all of 2014, had this little lift up and out in early 15, hit our light blue shaded line, and then sold off all the way down to these January 2016 lows, where price strength came back in, and we are right back up in this upper shaded blue line area of resistance. The candle for the month of November is very bullish so far and has pushed us up and over this area, but until the candle completes for the month, this is still resistance. So it failed here, it's popped through here for sure, and it's been a very bullish looking month so far, but we'll see how it ends up. It's the 24th of November. We still have a number of days to go. Going to move it away from the 5-year to the 2-year weekly. You can see this parabolic move out of our wedge that we had drawn in. There's a gap down here, but we are up and over that shaded blue line, and price is looking very strong. I'm filming this at about 8:45 on Thursday morning. It's a half trading day in the US today because of the Thanksgiving holiday, and I will be taking the day off too, so it's going to be a very short video today. I'm not going to put any new charts forward, but I will leave you with an interview that caught my attention with David Stockman. I'll show you that interview in a little bit, but he's making some very powerful statements. I'd highly encourage you to watch it, and it prompted me to take a look at some charts, and here's one that I think is really worth keeping an eye on here, and that is, we've talked about this one before, JNK, the junk bond market. So I'm going to pull it into the 5-year monthly. We were talking about this area, so on the 5-year, this orange line being an area of resistance, my area of resistance. Last month we had this candle that would suggest a little bit of a top. It's only a suggestion until we get follow through, and so far it's looking okay. This month it's brought us right back up into this zone, but as this is an area of considerable resistance going back such a long way, I want to see how this candle follows through this month and behaves for the rest of November. I think that's pretty important to keep an eye on. So going back to David Stockman's interview, he's making a lot of very assertive claims about the market going forward into 2017. What I'm trying to say here is, if he's right, then it would make sense to me that it would show up here pretty soon. So I think that's why this area right here, I'm going to move it away from the monthly to the 2-year weekly, is worth keeping an eye on. So we've got this tiny little head and shoulders pattern perhaps forming here at this very important area. This orange line is very important. So here's the left shoulder, the head, and a sloping right shoulder. If it starts to roll here, that would be a little bit concerning, at least to me. So keeping an eye on JNK. Here is that interview that I was referring to in my video today. Here's the link to it. I will include this in the show notes at the bottom of my video. It was David Stockman on CNBC last night. Very compelling interview. He made some pretty interesting points. He seemed very vehement about his opinion, and it prompted me to take a look at my charts, and it pointed me, at least, I might be wrong, but it pointed me in the direction of the credit markets, and for that I use the high-yield junk bond market as my proxy, specifically JNK. So if he's right, then I would be keeping an eye on that JNK chart as an early canary in the coal mine kind of thing. If it starts to behave a little wonky here, it might be worth paying attention to. So with that, I'll leave you for today. Have a great weekend, and we'll put a video out again next Tuesday. Thanks very much.